Hi everyone, what if an international bank really collapsed? Now, of course, this news is not in the mainstream media because everybody is just speculating. The two banks that's now being highlighted is Credit Suisse and Deutsche Bank. Alright, incredible, right? Now think about this, right? Deutsche Bank has loads of business network across the whole world, and Credit Suisse itself, right, is one of the few companies that rebounded back in Lehman Brothers time, and apparently now is going down at a very alarming speed. Okay, so these two banks will be covered later, but the point is this: what if an international bank collapse? What will happen to the stock market? This is the main thing that I want to drive in today. Now, before we go into that itself, once again, disclaimer apply as usual, guys, and do your risk assessment. And of course, thank you AIMS for the kind sponsorship. Now, the thing is this, we have this ongoing right now, okay? A ABC reporter deletes tweets claiming the investment bank on the brink. Now, what happened is this guy, David Tyler, he came in and said that a credible source tells me a major international investment bank is on the brink. So it's trying to say that there's an international bank, okay? And this guy itself is an ABC reporter, and the market now is having a frenzy of rumors and misinformation, unverified claims that the European investment banks, Credit Suisse or Deutsche Bank, could be set to collapse and spark the biggest financial crisis since 2009. Now, we all know what happened to Lehman Brothers in 2009, and the thing is this, now it is coming back again. So what we have here now is that the Credit Suisse stock last night tumbled 6%, okay? Right? Quite bad, right? And even lose more to 3.52 Swiss franc. Now, of course, what we saw was the CEO came in to, trying to tell people that everything is good, strong capital base, liquidity position is good, blah, blah, blah. But we all know that Lehman Brothers also said that before they collapsed, okay? And Deutsche Bank also traded lower, down 2.3%. Now, this counter I've been calling for sales since it was $12, it $10, then $9, 9 euros, sorry. And the thing is this, why? Because these two banks, as you can see and compare, that they are coming down no matter how the market recovered. So it's very simple. If the stock market is going up, but these two are going down, then it's very natural that if the stock market overall is coming down, then the two of them will go down even faster, right? You understand my point? Yes, indeed. So this is why I'm saying that these two counters may have a problem. And of course, let's look at the counters by its own, okay? Now, this is Credit Suisse, as you can see now on Credit Suisse. Now, this is 2020 before pandemic time. Yes, during the pandemic time itself, we saw it gone bad, right? Okay, let's take a look here. Now, it was at 14, okay, level, and then during the pandemic time, it went down all the way, okay, all the way down to about 650, okay, 650, and of course it rebounded a little bit. Let me change the color a bit, yeah, to make it nicer for you guys. Okay, let me just try some green. Okay, and then it rebounded because we have the whole world recovering. Understand? Okay, so the high was almost $15, which is like higher than the pre-pandemic. But very interesting. After that itself, right, this counter has been going down very nicely, and it went down to the low during the pandemic time. Okay, so the thing is this, of course you see a bit of technical rebound after that, right? But incredible is now much lower. Oh my god. So the thing is that if you look carefully, now imagine pandemic recovery with the trillions of dollars pumped to the system, the bank actually doesn't benefit from it itself, then it's quite clear that there's a chance that it may go down even to the 3 series, okay? So that's what I'm seeing right now on this particular counter. Then, of course, on the other side, what you have here right now, let me just clear my screen for a moment. Let me clear that up. Okay. Now, this is Deutsche Bank. Okay, Deutsche Bank, you can see right here itself. This was the 2020, whereby we have the Deutsche Bank was about 11. Okay. And the pandemic brought it down all the way down to 5. Okay, that was bad, right? Then, of course, the market rebounded all the way. Wow. Okay, went all the way to almost 1650. All right. So that it was much higher than the pandemic time. Agree? But the problem is after that itself, look at it, it's coming down really fast, okay? So it's down back to 753, and there is a high chance that it may test back the 5 series again. So to me, it's alright. Technical charts tells me that the chance of the market going down to 4 on 5 respectively, the chance is there, okay? That is why I'm quite bearish on these two counters, okay? Now, of course, What made me think that way? Because now we can see that the Credit Suisse default swap, okay, now the credit risk has spiked to record high last night, okay, topping 280 basis point at one stage itself, okay, basically disallowing the company from any investment banking business. That is bad. My god, that was bad. How bad was it? Look at it. This was how bad it was back in 2009, whereby that was the Lehman crisis, okay. So now the thing is this, the problem is now we are seeing the same thing. So you can tell me about that. The guy with the ABC reporter, maybe he's just lying about stuff. But the thing is that these numbers, the credit default swap, you cannot lie about this. And this is real cash going on. It can't be just a one-person grapevine that created this spike up, okay? So I don't think so, and I don't like what's happening, because even, let's say we don't have this grapevine, okay, if we take this away, this information was fake, let's say example is fake, okay, or eventually it became fake. The point is this, I want to tell you this is going to be crazy though. Let me just bring the colors in just to show you better. You can see that it was already rising up, okay, before the news came out. So it already, by the time this happened, if you look back across, it was already back to 2011 time. That was bad enough. And after that, the worst was back in 2008. So this is where I'm going to tell you this, is that the problem is already there. And it just basically escalated, okay? This is how I see it from the market. Now, let's just look into Credit Suisse problem over the last 2 years, okay? Now, first of all, we have this Greensill insolvency, remember? Then, of course, we have the Archegos, right, whereby this guy blew up his portfolio, $20 billion. And, of course, Credit Suisse was so badly hit, they lost about $5 billion over there as well. And, of course, other companies got it off. I think Goldman Sachs got it off easy and stuff like that. But, of course, Credit Suisse was one that got it bad, okay? Then later on, as in January this year, the chairman actually resigned. I mean, think about this. Why would you resign, right? So basically, after Christmas bonus, then whatever it is, it went down further, and then we have the profit warning, merger speculation, which technically really didn't follow through. And of course, then the new CEO came in, which is I just mentioned, and the price is now much lower. Okay, so look at it. This is bad. This is really, really bad, right? So you can see that this company is not performing, and this can get worse, okay? Because look at the balance sheet right now. I look at it through, you can see that the numbers are bad, and the administrative expenses itself is ridiculous, okay? It's so high. So overall itself, right, you can see right now, that's why their income is in negative position. So all I say is this bank has a problem, and it's very clear that if things really go wrong anytime, this can be really drastic, okay? Oops, sorry, there's some PowerPoint issue right now. Just give me a minute. Okay, let me just clear it up, this one first. Oh dear. Okay, let me just bring you up. So sorry, I think that I lost the PowerPoint over here itself. Okay, never mind. Let me just try to fix it up for all of you. Apology on this. Okay, so what we have right now, okay, you can see over here. Okay, now this is from Wall Street Silver, one of those on Twitter. Okay, now this particular person is saying that Credit Suisse is probably going bankrupt. Okay, what is reason? Now the reason is that the share price. Now it was $14.90 in February 2021, and now it's $3.90, and that is pretty spot on because the counter lost more than 60-70% when the market was going up. All right, that is pretty bad, right? And now the thing is this, okay, the price to book ratio itself is 0.22, and the market is saying that it's insolvent and probably bust, okay? Of course, this is like, question mark, okay? Now, is there going to be a possible 2008 movement? Well, moment itself, well, I can say that it could be a synthetic problem. So you can see right now that Credit Suisse by default swap itself is really at the high end itself. And this is like it happened again back then in 2020. So all I can say is that this is no good, okay? This is really not good, all right? And of course, you have Jim Cramer coming in and saying, no, things not going to be that bad. He believes that this is just only temporary because he says that they cannot let what happened in 2007 happen again. Well, history doesn't really repeat, but it often rhymes, okay? That's my point here. And I don't think so. I don't think so that the Federal Reserve will stop raising interest rate, okay? The speculation is that now the market is saying that yesterday recovery was because there could be a rate cut. Now, we've seen this before, right? Every time when the market is near the low end itself, when whole is selling, And I tell you guys yesterday to buy into the market. Yeah, yesterday I called for buy, remember? And when that all happens itself, right? They'll come up with this nonsense and say that, okay, there's a rate cut. Come on, guys. The Federal Reserve has already just mentioned that there's no way they're looking at a rate cut next year. So this is again the Wall Street. They love to play this game with people, and of course, incredibly, there's something that I think I just saw it just now. Sorry for that. You can see that, right? Apparently, all right, that's Bud Simpson. They actually have a video that whereby they talk about Credit Suisse. That's interesting. And of course, in that particular video, that company went bust. Okay. Now we all know that Simpson has a very uncanny way of predicting market. And of course, I cannot really verify this video, but it's kind of for fun. Okay. So maybe you can dig it and see whether this video really exists. Okay. All right. So that is the sideline on this. Now on the other note right now, let's look at the US 10-year yield. Okay, now the thing is this, the 10-year yield yesterday and the day before, the last few days has came off, right? Now, why is that so? Because, like I say, you can't have market running up like that, okay? Of course, you can't. And of course, when the price hit 4%, what happened is that the bond price is down, right? So what people do is that they quickly buy the bonds because they can get it at the the bond rate at 4%. So when the people come in and buy, then naturally the price will move the other way around. You understand my point? So it is understandable why the bond price, the yield came off. Now, because the yield was one of the highlighting points that causes the stock market to, come down. So if the yield come off a little bit, obviously the stock market will rebound. That's why yesterday we had the yield down so much in a way, the stock market rebounded equally high. Now, the question is this. Look at this. This is point A, this is point B, and this is point C. Okay, so you can see that beautifully itself. This is a strong trend since August, and I believe that this will continue and it will go up again. So my view is that it's still going to hit 4.5% by the end of this year. Okay, so as long as the yield is moving upwards itself, there's going to be great difficulty for the market to stock market to actually perform. Okay, now I've been telling you guys regarding about the Tesla stock itself. Now yesterday Tesla really jumped down because of the factory production, and I told you guys that Tesla will come down to 242, right? Remember, it was in my previous video, and I said that 242 because there's the gap right here. And my God, look at it, Tesla really came down to 242. Brilliant, right? So now the thing is this, I'm gonna say up front once again, if the Tesla stock stays at 242, it should rebound back to 270 range. But if the market loses 242, oh my God, this is gonna be one-way trip down to 207 range. Okay, now the volume is pretty big yesterday and the day before, so that means that there are buyers coming in. But again, like I say, the whole market went up yesterday, but Tesla comes down. Is something similar like what happened to Apple, right? When the whole market came off, Apple sold off, and of course later on the stock market just collapsed. Now if we compare this right now with the with the S&P 500, you can see right now that usually, okay, when the Tesla stock goes up, the S&P 500 goes up, right? And of course, if Tesla share comes down, the stock market S&P goes down. All right, pretty cool, right? All the way, it's been pretty accurate. Okay. All right, you can see that in my drawing in advance. Okay, but the problem is that yesterday we have a great volume on Tesla and the stock market went up. The S&P was up, but the Tesla stock was down. Okay, so something is fishy here. So it's either that Tesla will rebound tonight, or maybe the S&P 500 may continue to drop again. Like if this thing continue, right? Okay, let's take a look on another counter, and that's Apple. Now, Apple, remember I told you already that Apple itself, right? This figure here, 147 is 152 was the first support, and once it loses it, that's it. There's no way to talk about it because the next number is 147. So 147 was the figure that I gave, and said that if the market loses 147, the next figure is 138. And oh my God, I'm so good with this. It's spot on, right? Exactly 138. The market really stopped there. All these numbers are all given in the previous MAO, so you can double check and see whether I'm right. Okay. Now the thing is this, I'm gonna stick to my guns. If the market stays above 138, we may see 147 again, right? Because that is what supposed to be. But if 138 fail, oh my God, this is going to be bad. It's going to be 133, okay? 133. Now, the thing is that you can see Apple relationship and the S&P 500 is even much more, their relationship is even tighter. Look at it. When the market is, when the Apple is up, S&P is up. When Apple is down, S&P is down. Can you see that? The relationship itself is even closer than compared to Tesla. So my bet is that as long as Apple stay up, no problem, S&P will stay up. But if the Apple loses 138, then I'm so sorry, 132 is next, and of course S&P 500 may come down further, and it could go down to 3,550, which is now trading at 3,678 right now. Okay, so that's something to look forward to. Now, the big question is, of course, the yield is coming down naturally because the dollar is also coming down, right? Yes, indeed, there was some profit taking on the dollar from 114 down all the way to 111 right now. Now, I did say that 111.71 is a very strong support. We have to watch out for this. And yesterday, the market closed below it. Okay, so not so bad, right? Not so good, sorry. So what happened now? If the market continues to take some profit, it may come down to 110 area. Now, this is a strong support and trend line or channel since June. So this is A, this is B, and this is C. So logically, if it come down, it may drop down to 110. Okay. Now, on the upside itself, right? If this is like 1, this is 2, this is 3, and this is 4, then if the market finds some space and recover, then 114 could be 114, 115 will be next, or who knows, it may go even higher. Okay, so that is the dollar chart right now. So I tell myself this: if the dollar recover above 111.80, I'll write down for you 111.80, then I believe that it's time to go up again. Now, if the market stays below 111.80, like what having round, then maybe we should see a little bit more profit taking. Yep. Okay, so take note of all this information. Now, of course, the dollar itself, people have been asking is, will the dollar collapse? Now, you must understand something here, my friends. Now, the creation of the Bretton Woods system, right, that was back in after it was done in 1944. Okay, that was theoretically, created during the World War time, right? Okay. So what happened is that they got the countries to come in and make the US dollar become the primary currency. So you think about this right now. Look at it. This is just 2019 statistics. Okay. Now the US dollar that is traded every single day takes up 88.3%, okay, of the whole thing itself, right? Think about this, okay? So in this way, I'm just trying to say that the utilizations are stupid, okay? So for the US dollar to go down is impossible. So would the dollar collapse? I tell you, it's impossible. Now they'll find many ways to make sure the dollar stays strong, which you're seeing right now. And you think about this. The Federal Reserve is going to increase interest rate further, right? So the dollar will be pressured to fall up further. And what will happen to the currency of other countries? All these currency will definitely be hit, correct? So think about this. If the US dollar keep on climbing higher, who benefits? Of course, the American benefits. So that's where all the trade deficit and stuff will greatly reduce. And that is why I said that the US dollar will be climbing and going higher, because fundamentally and based on the rule of it itself, right, you don't see the US dollar coming down. Yes, indeed, the $26 trillion, what they call debt is ongoing, but what's the point? The thing is this: the market doesn't care, right? So that's the reason why I felt that as long the US dollar is going up, traders, you should be careful, because there could be further upside for the yield, and that will pressure down equity market, gold, and etc. Okay, all right, let's look at the charts for this today right now. Okay, for the chart wise itself, right, I already share with you that if the Dow Jones come down, it will go down to 28,639. Now, how I get that figure was I did a very simple mathematics. I took the difference between of 85% and 80% mark. Okay, remember that. Okay, and then I have the middle mark. Okay, the middle mark. Okay, then that's where we have it, right? Okay, then after that, what I did is I did the same thing again. Okay, I did the same thing again. I took the 80% mark and the 75% mark at the mid 77.5, right? And I told you guys that usually the market will bounce around there. And my goodness, look at it. The low of the day, okay, the low of the day, yes, on this day itself was 28,609. And the number that I mentioned was 639. So which means that the market hit my point and then blast all the way up itself. Oh my god, this is how incredible the TA is. And obviously, if the market is to like rebound from here, the next target will be back to 29,563. And of course, the Dow really went up. Now, honestly, I didn't expect it to reach this point within a single day. Yes, I expect it to go up itself, but not within a single day. So look at the power of the market. Okay, so now what's happening? The market now is trading above 29,563, right? So which means that there's a higher chance that the market may test this high here, which is about 29,837. It may test here, okay? Why? Because they need to take out all the stops in the market. That's how the market works, okay? But is it going to go back up all the way to this here itself at 30,487? Anything is possible, okay? Anything is very possible right now, okay? So watch out for this, traders. This thing can be done, all right? Okay, so that is what I have for you for the Dow Jones right now. The China stock market itself is going up. Okay, China A50 is up and it's above my trend line right now. So that means that it could be coming up above the 13,000 level, the psychological level. Now let's look at this, the market for today for the Dow Jones right now. Now the Dow Jones itself, right, the KSI is green, but this KRW is cyan. The cyan is actually blue, cyan color. Sorry, my bad. The bar is cyan and it's actually telling you that the bullishness is there. So as long as the market stays above 29,511, which is the pivot one. Now we all know that pivot one is something that we don't trifle with. As long as the market stays above pivot one, 29,511, there's a chance that the market could go higher. Now BNB RL itself is at 29,675 and the market has now breached above it. And this is a CCRY with a BNB. So if the market can stay above the BNB RL, which I told you before, 29,675, then there is a possibility that the market will go towards the MA30, which is 30,358. It may go there, okay? So traders, just take note. But of course, if the market, let's say if let's say the US yields have to go higher or the dollar strengthen again, then the pullback have to watch. If the market pull back below 29,511, then the pullback can bring it down all the way to 29,127, the MLP level. Now for the Nasdaq, as you can see now, it's trading above the pivot one, and we mentioned many times before, never fight with the pivots. So as long as the market stays above 11,252, there's a chance that the market may go up again and test about 11,500 series, okay? Now KSI is still red, but the KRW has also turned from red to flat, which is actually telling you that the weightage shows that there's some buying interest at the bottom, okay? So traders, you need to watch already. S&P 500. Now, same thing again. The S&P has a BNB yesterday, and if now it's breaching past the BNB RL at 36.98, and once it stays above that, the first target will be 38.05, and that is almost 100 points away. It is possible. Anything is possible. Yep. Now, KSI is red, but KRW is cyan, so that means that there's some buying interest right now as we are speaking. Okay. Now, Hong Kong is closed for today for holiday, and Nikkei. Let's take a look. Now for Nikkei, okay, Nikkei has moving up right now, though the colors is red bar, but it's going up. So it has broke the BNB RL, which is at 26,692, and it's moving upwards. So basically, it's like going towards the 27,146 MA30 level. Okay, MLP today and pivot one is pretty. Okay, MLP is 26246. And pivot one is 26172. So overall, it's very bullish for the Nikkei. Very bullish because it's above the pivot one. And we said before many times again, as long as the market is above open and pivot one is always up buy. Okay. Now DAX will be opening up later. Let's look at crude oil. Now yesterday, I was already looking at crude oil, and from $82, now crude oil is now trading at $83, and I'm still bullish on crude oil, and I think that this counter is going to test all this KCB, which is about $84 to $84.90. Okay, it should be able to test all this figure. And of course, the thing is this is the BNB RL, right? The BNB RL is 86.51, so if the market can go there, it's all right. It could actually be good. Okay, 86.51, trying to get it properly there. Okay. All right. Now, same thing again. Both KSI and KRW are having a mixed spec signal, but overall itself looks kind of positive. Yeah, looks kind of positive. Okay, and let's look at this gold market right now. Let's take a look. Okay, I think there's, okay, need to do this. Okay, silver is pumping up beautifully first. Okay, let's talk about silver. Oh my god, look at silver. It's pumping up to $21 soon. Oh, that's fantastic. Remember, guys, I've been telling you this. Silver is a buy, and now it's at almost $21. Congratulations for those who have been buying silver. And if silver crossed 21, 29 today, there could be further upside. All right, good well done. Okay. Now, how about gold? Gold is trying its best to recover. It has a very strong recovery yesterday. Now, we tell you before yesterday that once you see two dojis, usually we'll see big movement. And of course, gold yesterday was big movement, $40 upside in a single day itself. Now, they basically take away all the KCBs, right? So you can understand the power of the double doji, and it's something that I've been warning yesterday throughout. Okay. Now the thing is that now we have the KSI. Let me just do the refresh again. The KSI is green and is no KCX. That means overall it's bullish. And so you see the market going up, right? So it could test 1714 as long as the dollar actually goes down lower. Okay, if the dollar goes down, then of course we can see the market pushing up. Okay, towards 1714. Okay, all right. And that is the gold and silver. Let's look at the Bitcoin and Ethereum. Okay, let's take a look right now. Now look at Ethereum is trying to find its base. Now 1315 is the pivot one, and MLP is 1312. So now we have MLP and pivot one supporting it. Hence, therefore, there's a chance that we can see a little bit of rebound for Ethereum. Now, I'm still bearish on Ethereum and Bitcoin, but of course, if the dollar had to pull back because of whatever reason, then there is a chance that we can see Ethereum bumping up to about 1356. But and of course, my KSI and my KCX is in a positive note, so that's why there's a chance of the market going to 1356 later. Okay. But again, I'm not comfortable to buy into this, so I leave it alone. Now for Bitcoin, we have a strong BNB yesterday. It went down the low of 18,881, and then it recovered all the way to 19,56593, right? Okay, so in short, now the market is staying above pivot 1 right now. It's staying above pivot 1, and the KSI and the KCX are all pretty bullish. So overall, you can see most likelihood the market is going to go higher, and we can see going up to 20,078. Okay, it is possible that you're going towards there. So you can see that for today overall itself, right, the market seems more inclined to on the buy side, even though we have this Credit Suisse and Deutsche Bank problem. But of course, the market hasn't really proven to it itself. Hence, therefore, the chart rules. As long as the market calls for buy, we stick to the buy side. Okay. All right. Wish you all the best for today's trading. This is Kel signing off. Bye bye.